let's put the spotlight on CAMS and let's discuss the outlook going forward with Mr. Anuj Kumar, who is the MD and CEO of the company. Hi, good morning, sir, and thank you so much for your time. First up, let's talk about your FY26 outlook for the business because as expectations for the reduced net flows, the MTM is expected. Any impact do we see on the business going ahead? Help us understand more on this bit.
We will see a small impact. If you see, the markets have now been on a cyclical correction for almost 6 months now. Despite all of that, MF assets are down about 3% over the third quarter peaks. Equity assets are down about 4%. So we'll see a small impact. For the full year, our expectation is that we will post a revenue growth of about 26% year on year and a profit growth in excess of 30% again year on year.
Right. What about retail? It seems that there's been a cautious tone there for the fourth quarter. What precedent does it really set for the registrar and the business and the industry?
I think there's been a fear and there's been a thought in the minds of people that most new investors, both in mutual funds and direct equity, came into the market in the last 4 to 5 years, and whether they have the capacity to kind of withstand a 6-month or a 12-month downtrend. I think from that perspective, things look very good. Like you've seen, despite a 14-15% fall, from the peak to the bottom in indices, MF assets, like I said, have gone down less than 3%. Net flows in equity net sales is holding at about 75% of the past number. So that's a good trend. SIP inflows have been increasing month on month. So you've seen an increase almost every month till February. And therefore, I think the resilience of the investor, the fact that some of them are getting used to staying in the markets which are cyclical, and that investors are not making any knee-jerk kind of decisions, I think that is showing up, which is a very good sign.
The overall SIP flows still remain strong. So what kind of long-term industry growth do you expect in the new fiscal? What is the SIP collection outlook for the company?
The SIP collection, like I said, has been positive month on month so far, which is a very strong sign. Traditionally, mutual fund assets in the last 10-year period have grown close to 20%, even though the base has become very large. The base is now, close to 70 lakh crore. During the year, of course, the asset growth has been in excess of 30%. There were quarters when assets grew about 39-40. But I'll leave that aside. I think the baseline asset growth of 19 to 20% has happened in this year, happened in FY23 too. So our expectation is that even on a large base, it is fair to expect that MF assets can grow high teens, and that should hold up the growth of the industry over a medium to long term.
All right, there has been a JV with K-Fintech called Mutual Fund Central. What's the potential here and what kind of incremental additions are expected from this from here on?
The JV was put in place largely to create unprecedented investor conveniences, which do not exist in any cohort industry, whether banking or insurance or anything else. So that part has played out well. Investors have taken very well to MF Central. It now has a large servicing footprint. MF Central has also given out APIs to a large community of partner websites and partner platforms. So you don't necessarily need to come to MF Central either to transact or to look at your CAS. Or any of those things. CAMS and KFIN have now also created a single unified protocol to do loan against mutual funds in the last 12 months. Although this product has been around for the last 6 years, this has seen unprecedented uptake. You should keep in mind that out of the almost 40 lakh crore plus of individual monies, less than 1 lakh crore is under lien. So it presents a large opportunity for investors to take secured loans at a very low competitive rate. So MF Central has delivered to the promise broadly. Of course, the financial transactions are yet to scale as much as we had thought. But outside of that, the scale-up has been very impressive.
Right. So Anuj, the recent tie-up that you've had with LIC for repository services, tell me how big a deal this is and what other cross-selling opportunities do you think you can finally, gather with LIC?
So for LIC tying up with the insurance repository, I think it's a milestone event in the insurance industry. LIC is more than a 50% share owner in the life insurance business. And a lot of the industry follows the leader in every industry, not just here. So a lot of interest is about to get generated in the insurance industry because LIC has taken this decision. Also, the fact that we have close to 1 crore e-insurance accounts, and practically every one of those investors has an LIC policy. So they will be able to bring in the LIC policies here and better manage their portfolios. And with Bima Central sitting as a layer on top of this, you will soon see, and you will see it within this year, that renewal reminders, payment of renewal premium, digital loan against insurance, able to manage your entire insurance portfolio in one screen on one app. All of those things will become possible. So it's a great milestone event for the industry.
Now, KRN payments business analysts remain bullish. What are the growth prospects here?
So the payments business, our payments business, is reflective of the retail footprint in financial services, largely coming from three boxes, which is home finance, MFS IPs, stock SIPs, and insurance premium. As retailization happens, so you know what the big trend is. Households are making more money than in the past. They're saving and investing more. And a lot of that is shifting towards the small ticket, towards the middle of the pyramid. As that happens, as volumes increase, whether it is investors who are bringing in money into these industries or people who are getting into the capital markets, I think the collective impact on both our payments business and KRA business will be very positive and accretive.
All right, and lastly, talk to us about the margin outlook. How are the operating leverage expected to kick in?
Over the years, we have demonstrated an operating leverage of about 1% to 1.5% every year. This is after all the puts and takes and after the impact of the multiple forces that come through. Our expectation is that we should be able to hold margins in the 45% range in the coming years. That is operating EBITDA.
All right, Mr. Kumar, with this, we let you go on that. Thank you so much for taking the time out and speaking with us. But with this...
If you like this video, then like, share and subscribe to ET Now.